on to Chapter 6 reports. Okay? So here we are once again, bank reconciliation. So a few things I have to talk about is that, one thing that your book also mentions is that since bank reconciliation is a more common one that you guys are most likely going to be doing in your future careers as accountants, the second thing you would do is going to be your reconciliation for your credit cards, okay? Now, here I'm going to tell you this. The process is identical. However, at the very end of your reconciliation, you have two options. You're either going to pay off your credit card or you can enter in a bill. So let's go ahead and just do this real quick example and see what the difference is, okay? So here, if you're on page 200 here, we're going to be taking a look at our credit card, okay? Now, once again, I believe we talked briefly about our credit card transactions. So how do we see them? How do you enter them? Pretty straightforward, right? We took a look at this in chapter 4, okay? We entered in our first credit card transaction, and we got to see how we're able to see our register from here, right? Straightforward. So now we are taking a look at how we can reconcile it. Now, in this case, if you click on reconcile on the home page, you are actually going to be limited to what you're going to be reconciling, okay? In this case, wow, never mind. That's a checking account. In this case, you can reconcile anything that has a register, just like what I mentioned before, right? Any other current asset, any liability, etc., etc. You can reconcile them all right? And the one that we want to make sure to do is that we are going to be looking at our National Bank Visa credit card, right? That's the one that we're going to be reconciling today, all right? So now the date is exactly how we want it, right? We actually, no, I don't want this. I want to go in the future, right? We're going to do February 21st of 2021, right? Now here, the banking information here, this should be somewhere on your, just in your books if you're keeping well of your books. Every time you reconcile, it's just going to pull the next information for the next reconciliation. So if I were to do this for my bank account, it's going to reflect what I started off earlier. So in this case, if I go to my checking account, it's going to start off at 5424.92 because that was the last reconciliation I did. So this number is going to carry forth for the next month over, okay? Now, here's a little quick mental note here. Only QuickBooks Premier, Enterprise, Accountant, all of those. That's more than Pro. You can do as many bank reconciliations within a time period, right? But if you're working on Pro, you can only reconcile 1 month at a time, okay? And you can only undo 1 month at a time, where if you have Premier or more than a Pro, right? So Premier Enterprise Accountant, you can go beyond that, okay? Or you can undo beyond that, all right? But in this case, just a little mental note there, I want to go ahead and reconcile my bank credit card right here. So this number right here is from my previous reconciliation for the previous month of January 31st of the previous month, okay? So in this case, I want to reconcile for this year. And now we're going to check our bank account in my credit card. So here, let's take a look. I have now $184.81, okay? And let's take a look here. So 184.81 is my balance that I need to get to. So let's go ahead and take a look at how much interest was charged on my credit card, okay? So once again, let's take a look. So here's all my transactions. My transactions totaled up to a total of $168.70 plus $16.11 worth of interest. Ouch, that's a lot of interest right there. And this is only on a month-to-month basis. So I got charged $16.11 for interest. And I'm going to plug that in here. $16.11. The date is going to be in the future. Okay. And this is here. The account this time is going to be interest expense because this is an obligation that you're paying interest to because, you made the agreement that you wanted to use a credit card. So interest expense is what you're going to be connected to. This is how much interest I've accumulated for using my credit card for the month of February, right? Once again, same thing. My class is going to be overhead. Okay. And now I'm going to go ahead and click continue. So now, once again, you're going to do the exact same thing from your bank reconciliation, but this time it's a credit card reconciliation, right? You could choose to filter out your transactions, but in this case, it's pretty clear what I have, right? So let's take a look at my statement once again, okay? So I have 3 total transactions. I have a payment for $2,152. I made a charge for $133.30, and then I made an additional charge for $35.40. So let's go back to my reconciliation window and see here. I have my charge right here for $133.30 and $35.40. And I also have my payment for the $2,152. Okay? And now down below, once again, you should get 0 to match your bank and your credit card statement. So in this case, I only have 3 transactions, so it's pretty hard to miss this one. Okay? 3 transactions, there they all are. Those are the 3 things that cleared. Now I can go ahead and reconcile going on forth. Okay? Now, once again, this is what's different between the bank reconciliation and the credit card reconciliation. This time you have the 2 options. Do you want to write a check now to pay off my credit card, or do I want to enter a bill in to for me to pay for my bill in the future? And in this case, right, those are the 2 options that you have, right? Do you want to pay your credit card today? It's the end of the month, but usually when you have an end of the month statement, it's usually due the next month. So in this case, I'm going to say I want to enter in a bill. Now, here is something that you need to know. Now, if you notice that on your bank statement, you have what's called a minimum payment. In this case, I'm not obligated to pay my whole entire amount. I'm only obligated to only pay a portion, okay? Now, all credit card statements are like this. So the question is, how much am I going to actually pay off? So that's the fine line on whether you make your decision here. Now, if you do not know what you are going to pay, then I suggest you to go ahead and just write the check right then and there and decide right there how much you're going to pay, okay? Because the idea here is that QuickBooks recommends you, if you are planning to pay the credit card, but you just don't know how much yet, by you entering a bill, you're entering the bill for the full amount that's written on your credit card, okay? Now, of course, you can always adjust and change it at any given time, but the rule here is you shouldn't be adjusting or, changing the forms as you go. In this case, you need to be for sure how much you're going to actually pay if you want to enter in a bill. So in this case, I'm just going to say I'm going to enter a bill, and I'm going to click OK. And here's the bill window open. Once again, the date tells me, and then I got the reports as well. So I'm just going to close those out. The bill, once again, tells me what I have when I entered the bill in, and it gives me 30 days. So that means it is due on March 30th, and that's great. But here it is for the total amount of the 184.81. So this, when you enter it in a bill, it's telling you that this is you're entering the bill for the entire amount, and that's not true because you can't make bill payments, like you can't do half partial payments. So you have to be sure how much your payment's going to be. In this case, I'm going to say, for just, for fun, I'm going to say I'm going to pay the minimum of $50. So if I do that, then my rest of the amount that I owe on my credit card is still going to be there. And what you're going to do is you either write a check from there if you make a double payment, or wait till the next billing cycle rolls around, enter all the information, and so on and so forth. So in this case, I'm just making a reference that I'm going to be paying only $50 minimum payment. All right, and then you can enter that in your note saying this is credit card minimum payment. Okay, and once again, if you look down below, it's going to actually create an account for the National Visa credit card itself, and when the day that you actually make a payment to it, it will reduce this account. Okay, but in this case, I'm only saying I'm only going to make the minimum payment, and I'm going to go ahead and click save and close. Right, and that's how you use the reconciliation window for credit cards. Okay, any questions there?
No.
Okay, so let me take a look to see what other concepts I have. Okay. Nope, the credit card was the last one. Okay. So with that being said, let's go ahead and quickly go over the review questions. Whoops, I went over a little. Okay. So here we are. Oh, nope. Keep going up. Questions, multiple choice. Okay, questions for chapter 5. Okay. All right. You guys ready? So once again, please choose the best answer. Number 1, okay, asks you, okay, when the beginning of the balance field on the begin reconciliation window doesn't match, okay, the beginning balance on the bank statement, you should
C.
C, correct. Okay, now here I'll give you a little hint here. Most cases, the longest answer is more than likely to be the correct answer, okay? Just because, like, once again, the answer that has the most detail in it is probably the most one because it's accurately telling you exactly what to do. So in this case, C is correct. You're going to click on that locate discrepancy window, report, and you're going to find your discrepancy. Okay. Number 2, which statement is false?
A.
A says you can enter a bank statement charge using enter statements charges. That is not true. Remember, enter statements is only when you are trying to finance or charge your customer, okay? So this statements right here is for your customers. We talked about this in chapter 3. Okay? All right, number 3, okay, when you find an erroneous amount in the transaction while reconciling, correct this amount by D, either performing B or C. So this question is double click on the entry and then changing the amounts, okay? But that's only given if the amounts are inaccurate, okay? And then C says by selecting the entry on the reconciliation window and then clicking on go to and changing the amount on the actual transaction itself. So once again, this is only if you did make a mistake in your books. That's the only reason you're allowed to change those information. But once again, you may be stopped by your accountant for some reason. Maybe you're not allowed to be changing information. But once again, if you change this information, you're changing everything that's inputted in the whole entire book. So remember that. It's a domino effect, right? Any report or anything that has this change in there, it's going to change everything. Right? So make sure that you're careful of this if you do find an error in your transaction and you need to fix it. Okay? Number 4, okay, to properly record a voided check from a closed accounting period.
Is it C?
C is correct. So remember, we got to take a look at voiding a check. The proper way is to find that check in the register and either selecting it, right click and void it, or you can go to the edit menu and void that that transaction. Now remember, because you're working in a closed period, that means all of your reports that you completed that month or that transaction will be affected. So once again, okay. Number 5, okay. Which of the following columns cannot be displayed in the checks and payments section of the reconciliation window?
Would it be D?
Payee. No, we do see who you make a payment to.
The A?
A, check number. Yes, you that's how we were able to take off each check, because we associated by the check number.
Oh, the class.
Yes, the class does not appear because in this case, you're just dealing with all the checks. You don't need to know what class it came from. So in this case, B is correct. The one that you cannot display. Okay. Number 6, okay? You know you have reconciled your bank account correctly when
B.
the difference field amount shows 0. That is correct, right? All right, number 7, okay? The reconciliation summary report shows.
D as in dog?
C.
D as in dog, A and C. Okay, so A says the beginning balance shows what's on the bank statement. That's correct, right? The beginning balance. And then C gives you the ending balance that is shown on after you completed the reconciliation. So yes. So that's correct, right? That's the purpose of the summary, is to show you what did you start with the money with, what checks have cleared, what checks are pending, what deposits have cleared, and at the end, what your ending balance is supposed to be in your register in QuickBooks. Yes. Okay. Good. Number 8, okay. What accounts should be reconciled?
A.
A.
A, all right. Any account that that receives a regular statement. Yes. So, a bank statement, you're always going to have a monthly statement. Same thing with a credit card, a monthly statement. All right. Number 9, that's just what they recommend. You're not obligated to, but that's what they recommend. Number 9, when you undo a bank reconciliation, which statement is true? number 9. D is the correct answer. Okay, so in this case, undoing the bank reconciliation, okay, does not delete the bank service charges or interest that you've collected. So remember, in this case, I didn't show you the example just because my window closed out. But if you did undo it, what happens is that because you already manually recorded that you had a bank service charge or you had interest that you collected, that's going to be automatically calculated. So if you redo a new bank reconciliation for that same exact statement month, it's going to appear on the list of things that you've either earned or that you were charged for. So in this case, D is the correct answer. It does not undo the bank service fees or the interest that you collect. It only undoes like the reconciliation process itself. Okay. Number 10, okay, when a customer bounces a check, you should. D, number 10, that's correct. Click on the record bounce checks button at the receive payments window. Yeah, so that, remember, that's the top of the page. Okay. Number 11, when you finish reconciling a credit card account, you B as in boy is correct. Can create a check for the amount equal to or less than the amount that is due. Yes, so again, we talked about minimum payments. You're not required to pay your entire credit card off. You can make a partial payment, or in this case, a minimum payment. Okay, and you can make multiple payments. Right. Number 12. Okay, what is the accounting behind the scenes for a bill code to create the credit card liability account? C says increase, which is a credit, okay, accounts payable, and decreases, which is a debit, the credit card liability. So yes, so when we receive the statement, right, and we receive the bill, because usually a credit card, right, after it has the statement, you're given the billing information after that, right, and we enter in a bill. When we enter in a bill, that's exactly what's going to happen. You're going to increase accounts payable, but you're going to decrease your credit card account because you're basically transferring the amount over into a bill. And when you create a bill, you're increasing accounts payable. Right? Number 13, in what account is a transaction created if you complete a reconciliation and you and your difference is
Not 0, it's C. C?
Oh, sorry, I missed that part, not 0. You said C?
Yes.
C for 13, yes. That is correct, okay? A reconciliation discrepancy. So once again, if your balances are not equal to 0, you have a discrepancy. And that's why you got to go back and locate that discrepancy. Okay. Number 14, when you void a check written in the closed accounting period, QuickBooks gives you an option to create what? D is in dog. Now, I didn't talk about this because we didn't cover what happens when you close out a given period or what a journal entry does. But yes, if you did your reading, D is correct, right? It would give you the option to do a general journal entry in the close accounting period, okay? Which once again allows you to make your adjustments in your adjustments in that current period. Okay. So then number 15, you are notified that you have a bounced check. Okay. So what should you do?
A.
B.
Correct answer is letter A. You are going to contact the vendor to apologize and arrange either payment such as sending a new check or for them to redeposit the check. Okay. So once again, that is chapter 5. I'm not going to go over this part right here. You can find the answers in the back of the book. Once again, some of these questions are just basically the multiple choice questions that you just answered, but it's just testing on terminology. Okay. So with that being said, any questions for chapter 5?
No.